you've been watching Bitcoin Layer 1 over the last, say, year or so,
Yeah.
it feels a lot less like a slow-moving monolith
Oh, absolutely.
and a lot more like some kind of hyper-accelerated laboratory. I mean, the speed at which new standards are just popping up from the raw data it's really surprising.
It is. And I think what's so different about this wave of innovation is that it's not really building on Bitcoin, with side chains or synthetic stuff.
Right.
It's building from Bitcoin. It's taking the data that's already there, the immutable stuff that gives Bitcoin its value in the first place, and just giving it new utility.
Welcome to Inside Bitcoin. Today we are taking a deep dive, a proper forensic examination really, into the mechanics of the Bitcoin digital matter theory ecosystem, or DMT.
Yeah.
And specifically, we're dissecting the Bitmap standard.
And our mission today is pretty simple. We're not just looking at what Bitmap is. We're actually going to break down how this system uses Bitcoin's raw cryptographic data to build a persistent, shared virtual world. For you, the listener, this is about understanding the theory that's powering what could be the next huge frontier on-chain. And that, could really impact market structure and price action down the line.
Okay, let's unpack this. We've been looking at some really comprehensive research, and we have to say right up front that this research comes from Mo and the Moestradamos Research Team.
Yeah, that's really important context, because when we talk about DMT and Bitmap, we have to start at the very foundation, this idea of Bitcoin as a universal seed.
I find that framing so fascinating. The documents introduce Bitmap, and that's pronounced Bitmap, like Bitcoin block mapping, as this spatial digital realm.
Right.
And it inherits all the security and stability of Bitcoin. The whole thing is just built on this really elegant theory that Bitcoin blocks and transactions can be represented spatially. Suddenly, transaction data isn't just numbers, it's digital property.
And that conversion, that whole spatial idea, it all hinges on Bitcoin being more than just a ledger. The research sees it as a procedural data generation algorithm.
The universal seed.
Exactly, the singular unified seed. They even cite this great quote from Satoshi Nakamoto. Some inventions are more like discoveries.
The idea being that this was always there, just waiting.
Exactly. That the mathematical structure for a digital world was already baked into Bitcoin the second the Genesis block was mined?
Okay, so that concept, procedural generation, that's the real mechanical core here. We've seen it in gaming for years, right? Games that create these infinite random worlds from a seed number. But here, Bitcoin is the seed, the one and only immutable seed. It's not random at all, it's absolute.
And if you break that framework down, it's a really rigid process. The input is just the Bitcoin blockchain data, can't be changed.
Right.
The algorithm is applying a consistent rule set, the Bitmap standards, to that data. And the output is this unified virtual landscape. Because the input is permanent, the output is, non-negotiable and universal.
So if the data is the input, what does the theory say about the nature of the assets you build with it? What are they made of?
That brings us right to the formal definition of digital matter theory, or DMT.
Okay.
DMT proposes that the blockchain itself is like the Higgs boson of the digital realm.
That's a great metaphor.
It is. Think about it. The blocks and transactions are these immovable objects. They get their digital mass because they are secured by this immense ongoing work from miners and nodes.
So the energy securing the network, it's not just for the money layer. It's giving permanence to the data layer itself.
Exactly. That security, that energetic commitment, it grants this new digital world a permanence that's inherited directly from Bitcoin itself. For a builder, that changes everything. You're building on a foundation that's basically guaranteed to exist 100 years from now.
That's a totally different way to think about development risk.
It completely lowers the long-term risk profile for anything you create.
Okay, so this is where we need to ground all this theory and mechanics, because you really can't talk about Bitmap without its foundation, which is Ordinals theory.
You can't. Ordinals theory is the necessary precondition. It's what allows for the indexing of all this data against a specific Satoshi.
The smallest unit of Bitcoin.
Right. And without ordinals, this whole spatial concept, it just doesn't have a secure, provable link back to layer 1.
And that ordinal structure has two main parts, right? They're interlinked. First, there's the ordinals themselves, the identity piece.
The ordinals module is, it's basically a digital supply chain tracker. It indexes every single Satoshi by tracing the lineage of UTXOs all the way back to their creation.
Back to the Coinbase reward.
All the way back. It starts with the 50 BTC from block 0 and tracks how those funds get broken down over thousands of transactions. This gives every single Satoshi a unique hash, a unique identity. It's not just labeling them, it's establishing their complete family tree.
And that unlocks the non-fungibility.
Exactly. It makes what was once a fungible currency unit non-fungible.
Okay, which then sets up the second module.
Yeah.
The inscriptions. This is where the digital matter actually gets attached to the Satoshi.
The inscriptions module is the mechanism. It's how you actually write data, a claim, an image, some code into the UTXO, where that specific ordinally indexed Satoshi lives. This is what creates that vast digital coordinate system. It's how you stake a permanent claim on a non-fungible piece of Bitcoin.
And we've seen this evolve so quickly. The research points out two features that really make the DMT ecosystem work: recursion and the parent-child relationship.
Recursion is a total game changer. It lets one inscription call or reference another one, so you get modularity.
Right, so you can build complex things.
Yeah, instead of one static file, you could build, say, a 3D avatar where the head, the body, the armor, they're all separate nested inscriptions built on different sats, but all related to one core object.
And that parent-child relationship, I imagine that's crucial for the market structure. That happens when you split a UTXO, right, creating this family tree.
That's it. It ensures that when you split off a piece of a larger asset, you still have that cryptographic link to the original. You maintain the provenance. This system of tracking lineage is what gives you the integrity you need for a complex digital economy to actually work.
So if Bitcoin is this universal tracked seed, then the next step is turning that abstract data into something spatial. How does the Bitmap procedure actually start drawing the map?
Well, that's the elegant leap. The procedure is designed to be open, decentralized. Anyone can claim this digital real estate right on layer 1. The procedure maps Bitcoin's raw data blocks and transactions to what they call spatial analogs.
So the block data literally becomes a piece of land.
The block data is transmuted into a specific geographical canvas. That's the moment data becomes digital land you can actually own.
Okay, so let's get specific on the claimable units, because this is where the market utility is. There are two main units. First, the districts.
Districts represent entire Bitcoin blocks. The owner is simply the first person to inscribe the block height as blockheight.bitmap. So for example, 800,000.bitmap.
And if you own that district,
you're considered the admin of the block geospace by the community consensus. You can think of it as owning the primary deed to a whole city block.
And then inside that city block, you have the individual parcels.
Parcels represent the individual Bitcoin transactions within that block. And by default, every parcel is part of the district. So if you transfer the district, all the parcels, the individual lots, move with it. That's the simple ownership model.
But the interesting part is when you need to break up that property and sell it off piece by piece, you need a way to detach them. How does that parent-child relationship handle that subdivision?
It's the mechanism for it. If a parcel is not inscribed separately, it stays bundled. But if someone does inscribe it, say, 0.404.bitmap, which is transaction 0 of block 404, it detaches from the district.
Oh, okay.
It still has its cryptographic link, its provenance, but it becomes its own individual transferable property.
So it's like buying a city block,
Right.
then legally subdividing it and selling off individual lots. The lots are independent deeds now, but they're still tied to the original block data that created them. That individual detachment must be essential for liquidity.
Absolutely. The ability to detach parcels means you can create individual transactable digital lots. You don't have to sell the whole block. This layered system is what allows a functional liquid secondary market to even exist.
So the ultimate goal of the standard is to let owners pin inscriptions spatially at different resolutions, right? District, parcel, or even specific coordinates.
Yeah, to facilitate on-chain terraforming and building. You can attach digital structures directly to your digital land deed, and it's permanent.
And to make sure everyone's on the same page, the methodology has been formalized into this framework called CREP.
That's right. Theory, rule set, index, and product.
I want to spend a second on the rule set methodology, because that seems like the operational core of the whole thing. Mo's research really emphasizes that the rule set is the lens through which everyone views the data. Why is that so critical?
It has to be transparent, for sure. But the most important thing is that it must be resolvable and repeatable.
Okay, what happens if it's not?
Well, if the rule set is vague or too complicated, then every indexer that scans the raw Bitcoin data could come up with a slightly different result for who owns what or where a certain coordinate is.
And the real-world outcome of that?
Yeah.
What's the danger?
The outcome is what they call unintentional forking of the provenance.
In plain English?
In plain English. If two different indexers, like two wallet providers, follow slightly different rules, the digital map itself splits. The land you claimed on one indexer might not exist, or it might belong to someone else on the other indexer. The strength of the rule set is what guarantees a single, universal ground truth. It's what secures the economic value of your property.
And with a solid rule set, that leads to the index methodology. This is the data service layer.
Correct. The indexers follow those shared rules, scan the raw Bitcoin data, and then serve that structured spatial data to the public. They're the cartographers of the system, turning the raw material into the unified map for everyone to see.
Which finally brings us to the product methodology. This is where developers come in and actually build things on top of all this standardized data.
Exactly. Bitmap products use that consistent, clean data. The theory is that developers benefit from the security and the shared user base, and every new product adds value back to the existing Bitmap owners, which drives demand for the digital real estate itself.
And we are already seeing this happen. The directory lists games like Bitmap GTA and Bitmap Tycoon.
Tying game worlds to permanent digital property.
And there are also infrastructure tools, like the Atlas browser for exploring reinscriptions.
Yeah, and the Atlas tool is a great example. It's designed specifically to visualize and navigate the cosmos of Bitmap for as long as Bitcoin shall live. It just reinforces that idea that everything being built here is betting on the long-term structural integrity of Bitcoin.
So if we zoom out one last time, from a market structure perspective, the whole system is basically leveraging Bitcoin's inherent nature data generated by cryptographic procedure, maintained by nodes, to create a persistent, shared, and scarce digital landscape.
And the longevity of anything built with digital matter theory is inherited directly from the immense robustness and immutability of Bitcoin itself. Every new block cryptographically confirms the last one. That ongoing process makes changing anything virtually impossible without losing sync with the network.
That's the real differentiator.
It is. That robust immutability is the ultimate differentiator for digital property rights. When you claim a piece of the map, you're claiming a piece of Bitcoin's history, and it's backed by the largest computational network on the planet.
That structural security is the key. Bitcoin blocks function as the long-term memory of the network. So if transactions and block data form this immutable foundation, just consider what it means for the idea of digital property rights to be recorded in that permanent, distributed ledger forever, secured by the ongoing energy and work of the miners. If digital land is inherently scarce, tied directly to the limited number of Bitcoin blocks, what does that mean for the concept of digital property inflation or deflation in this new economy? It fundamentally changes the economic calculus of digital ownership. If you want to continue the conversation and stay updated on Bitcoin price action and developments across the Bitcoin DMT ecosystem, check out the Discord link in the description or on the channel, where Mo will be sharing ongoing research, insights, and updates.
We'll see you next time on Inside Bitcoin.